Your 30s are strange because this is the decade where your life finally starts looking successful from the outside, right when it becomes financially overwhelming behind the scenes. In your 20s, being broke almost feels expected. You can survive on cheap food, split rent with roommates, and laugh off bad money decisions because everyone around you is just as lost. But then your 30s arrive and suddenly life stops being theoretical. Now people expect you to have answers. You're supposed to know how retirement works. You're supposed to understand mortgages. You're supposed to save for your kids. You're supposed to build wealth while also somehow enjoying life. And the craziest part, most people are trying to figure all of this out while feeling completely unprepared. One day you finally get a salary that feels decent, and for about 6 seconds you think, okay, maybe I'm doing all right. Then reality shows up with invoices, your rent jumps, your insurance gets more expensive, your car starts making sounds that feel financially threatening. Your parents begin needing more help. Your friends start buying houses. People around you suddenly have investment accounts and college funds and words like asset allocation in casual conversations. Meanwhile, your bank account feels like it's being attacked from every direction at once. That's why your 30s matter so much financially. This decade quietly determines whether your future becomes stable or stressful. The habits you build now don't just affect next year, they affect the next 30 years. And the truth is, most people aren't failing financially because they're lazy or stupid. They're failing because nobody ever explained what actually matters during this stage of life. So in this video, we're going through the 10 financial milestones that become incredibly important in your 30s. Not to shame you, not to compare you to anyone else, but to give you a roadmap for building real financial security before life gets even more expensive. And trust me, life absolutely gets more expensive. The first major milestone is eliminating consumer debt completely. Not managing it better, not keeping it under control. I mean getting rid of it. Credit cards, car loans, personal loans, buy now, pay later balances. All of it. The only debt that usually gets a pass here is a reasonable mortgage. Because consumer debt in your 30s is dangerous for one specific reason. This is usually the decade when your income finally starts climbing. You're entering your prime earning years, and every dollar going toward interest payments is a dollar that never gets the chance to build your future. Think about how insane this becomes over time. A $700 car payment doesn't sound life-changing month to month. Neither does a few $100s in credit card payments. But together, that could easily become $1,200 every month, disappearing into debt. That's over $14,000 a year. Over a decade, you're looking at well over 6 figures gone. And that's before considering investment growth you missed out on. And here's what makes this harder in your 30s. Life gets complicated fast. Your responsibilities multiply. Work becomes more demanding. Family needs increase. Unexpected expenses stop being unexpected because there's always something happening. A broken appliance, medical bills, helping parents, childcare costs, home repairs. At some point, it starts to feel like adulthood is just paying for things you didn't even know could break. That's why debt becomes so emotionally exhausting. It removes flexibility exactly when your life needs flexibility the most. When emergencies happen and you're already stretched thin financially, even small problems start feeling catastrophic. But when your debt is under control, Your entire life changes. You stop panicking every time your phone rings late at night. You stop fearing surprise expenses. You gain breathing room. And financially, breathing room is powerful because wealth isn't just about having money. It's about having options.